Welcome, ladies and gentlemen, Minds and Money, London and Commodity TV, only on the virtual format for you. We want to talk for the first time to African Gold Group, and Danny Callow, the CEO, is here with us. Good morning to London. How are you?
Good morning. Thank you very much for having me on.
Yeah, thanks for taking the time. Please give us a short overview onto your company in 4 or 5 sentences. What are you doing?
So we're a TSX-V listed developer and explorer. We have our flagship Kobada asset in southern Mali. We've just delivered an updated definitive feasibility study, which shows a 16-year mine life, of which the first 10 years will produce more than 100,000 ounces a year of gold.
Wow, fantastic. And I have it exactly also here on my notes. You have the DFS delivered. That is fantastic. What would be the Capex for the project?
So the Capex is 165 million to deliver first gold. So it's definitely down at the lower end of the capital range for a project of this size. But I'm very confident on those numbers because we are using a very well-established engineering company to do that, who have delivered a number of these plants in Africa before. And I've also had a lot of experience in my past life of building and developing large projects in parts of Africa as well.
Yeah, that would be also part of my next question, because I think your market cap is like 25-30 million, 166 million to finance. But as you said, you have a lot of experience. So how do you think you can manage that? Because let's say southern Mali is not like, let's say, Australia and Canada. So you need somebody specialized, right?
Yeah, look, I think first of all to point out, Mali is the third largest gold producer in Africa. So they are very well established. All of the major mining companies are operating in and around where our project is. So, you know, Hummingbird Resources, B2 Gold, Barrick, Anglo Gold Ashanti, Iron Gold are all in Mali and have been very successful in Mali. So yes, I think it gets a bit of a bad rap, but it's actually a very big, prolific gold producer. Onto your comment around the raise, yeah, sure. I mean, look, we've been out talking to a number of specialist debt providers initially. They are African banks predominantly who have a good experience in raising and financing projects in Africa. And at the same time, in parallel, talking to some of our onboard equity holders who would be asked to participate once we have a large cornerstone of the debt secured. So I think where we are right now is post DFS. We have a number of discussions ongoing. We have a very detailed data room in place that is being analyzed through various due diligence processes by a number of institutions. And, you know, as we know, these things are time-based. So it goes as quick as the companies have the time to do the detailed due diligence. But we're very confident that, as we've seen with some of our peers in Mali and other parts of West Africa, once you start to get some of the debt and the cornerstone on board, then the financing speeds up and generally gets closed out quite quickly.
As always, sometimes you need a first mover and things are going very fast, right?
Well, I think it's like a holding pattern, you know, around an airfield. Everyone's waiting for the first person to make the move and then they jump in. I think it's very similar to that. So I'm hoping that, you know, if we can get the first guys on board, then we should be able to secure the rest quite quick.
Super, perfect. What is, let's say, the standing of your licenses? ESIA, for example, is one of the keywords here. Do you have all permits so far? Is there anything which is still not in a good standing?
No. So in fact, we've had a lot of success in the last couple of months in updating our 2 exploration permits, which are attached to the mining permit. The mining permit is very secure. It's in place until 2045, so that's all good. And then about 3 or 4 weeks ago, we updated the markets on the approval of our ESIA, which is effectively our environmental permit that allows us to be able to start construction. So ultimately, we have all our ducks in a row to be able to start construction once we've raised the money. We're not waiting for any further main permits from the government.
Wow, that is fantastic. So you're ready to go, I would say. Do you still need to do a feasibility study or even a bankable feasibility study, or is the standard of your DFS already that high?
Yeah, the DFS is to a level of a bankable study in the sense that all of the capital costings and the financial model are based upon updated pricing from the market. So we are very confident that the capital numbers and the operating cost numbers are very realistic. And the level of detail on the geology, the processing test work that we've done is all to a level where we're very confident that we are now in a position to be able to build. We don't have to do any more studies.
Fantastic. Well, that is a very good thing to have. So where do you see your timeline now to production? Depending on funding, that is for sure, but let's assume you will have that in a time limit. How long would it take that to really build the mine?
To build the mine, so once funding is secured, to build the mine is 19 months, so just over 18 months. It's fairly aggressive, but very achievable. It's a very straightforward mine build, I should say. And yeah, 19 months from shovels in the ground until first production of gold out the other end.
Okay, super. So 2023, by the end of 2023, that's quite likely that you are in production.
That would be great. If obviously it's all around securing of the capital to build it.
Yes. Okay. Super. What does it look like? Because we are talking about Africa. Power is quite often an issue, I would say. Sometimes also supply of materials. I assume workforce is not a big problem, and I assume also that you have quite a good infrastructure. As you said, you have a lot of mines surrounding you already. Can you please describe that situation for your future mine?
Yeah, so from the employment perspective, West Africa is a prolific mining area. So skills are very easy to come by from the West African Union. Through my 30 years working in Africa, I've employed many West African skills that are highly qualified from Ghana, from Senegal, from Mali. So we're not worried about the local skills. We have a very good team ready to come on board to build the mine. That's quite specialized for that 19 months. And a couple of key personnel that I've worked with over the last 20 years who would come on board with me as well. So from a personnel perspective, I think we're very well covered. The intention is to employ 95% Malian workforce. So we're very keen on making sure that we upskill the local workforce, which is really important to me. Creating a lot of employment within the local communities, which obviously then feeds back into the wealth in the region. So that's key. Logistically, we have probably 4 or 5 ports that we can choose from to bring materials in on the western side of Africa there. I guess most of our materials will be coming out of Southern Africa. So you're probably talking 15 to 16 days shipment time to get it to site. So that's not a problem. Power is a problem in Mali. So you will see that most Malian operations have these great big, I guess, environmentally unfriendly power plants, which are mainly run on heavy fuel oil or diesel. We've made a decision to go for a hybrid plant, which means that we will have 10 megawatts of solar power available during the sunlight hours. And then we'll have the batteries to store that power. And then also we'll have to have some generators for when the sun goes down. But what that does for us is it produces around 45% or 42% less greenhouse gas emissions by going this route, because solar is a very green energy. It also reduces our operating costs by probably in the region of about $6 to $7 million a year on fuel price savings alone. So really, this is a win-win for us. And you're seeing this more and more in this part of the world now, where companies like B2 Gold and Endeavour are looking at these hybrid solutions to A, lower their costs, but B, also significantly lower their carbon footprint. So for me, it was a no-brainer from the beginning. We decided that we were going to go this hybrid route right from the start, and it's a very proven technology, very reliable. Solar panels these days are guaranteed for 25, 30 years, and it's a really novel way of producing power at a lower cost per unit and also much lower greenhouse gas emissions.
Absolutely. No, super. I think that's also the right way forward, definitely. And more and more mining companies, which I'm interviewing also, they tell me all the same. And I think this is fantastic. This is the way how it should be, definitely. So where do you see, let's say, future exploration potential, and let's say maybe also future growth potential and enlarging the mine life?
The one amazing thing about our Kobada project in southern Mali is the exploration potential. We've only drilled about 4 kilometers of strike, within the recognized shear zones on the property. That's given us already 3.1 million ounces of resource and 1.25 million ounces of reserve. To put that into perspective, we have 55 kilometers of identified shear zones on the property. We've drilled 4. So therefore, we've probably still got about 90% of the shear zones where we're yet to put a drill bit into. So I think from an exploration upside perspective, if you're looking at 4 kilometers of strike yielding 3 million ounces, and we have another 50 plus kilometers of strike to drill, this could be a monster. And you know, I guess the trade-off here is always how much do you drill before you start to develop, and do we drill from 3 million to 5 million ounces out before we start? And that's obviously a discussion that we're having with our existing shareholders. But ultimately, this is a massive upside potential, and I think it's something that, should we decide with the support of our shareholders to put the drills back in the ground, you will see a continued rapid growth of resources and reserves over the next few years. And to put that into perspective, in the 2 years that I've been involved, we've increased reserves by 160%, and we've increased resources by about 45% already. And that's just on this very narrow 4 kilometers of strike. So really the upside potential is absolutely huge.
Yeah, that's crazy. So 4 kilometer strike lengths by now, and 50 more kilometers.
Correct.
Jesus Christ. Okay, that's really a lot. I like it. That's great. Last question. What is now cash in the bank? Meaning, are you financed until the project finance decision? And who are your major shareholders? And of course, what has management shares in the company?
So management and insiders own around about 8%. I've participated in every private placement raise. I'm a big believer in the company. I really think that we have a good future. We have enough cash in the bank now to keep us going for a substantial amount of time. We obviously, if we're going to go on a fairly aggressive drilling program, we may have to raise some more money. But at current burn rate, we probably have around 12 months cash in the bank, which is great. And in terms of our major shareholders, we're seeing a great uptake from institutions. So in the 2 years that I've been involved, we've moved from around 8% institutional shareholders up to close to 40% now. So we're seeing a good uptake from the institutional side, and a lot of belief in the project. And a lot of that is coming out of Australia, where the Australian market understands West Africa very well. So you'll see shareholders on our register like Nero Fund, who are probably our largest shareholder, who have been very supportive over the last couple of years. Ixios, Ausbil, and a number of others that are all in it for the long run. So they're investors that have bought in various private placements, and they've maintained or increased their position since then. So we're very comforted by the fact that we have supportive shareholders, and obviously we have to continue to deliver. You know, no one wants the price to stand still, and that's obviously what we're aiming to do over the next 6 to 12 months.
Fantastic. Super. Danny, thank you very much. That was a very helpful insight into your company. And yeah, please just get the money into your company, start building that, because I think Mali really needs your project.
Thank you very much for your time. Appreciate it.
Thank you very much, Danny. Yeah, ladies and gentlemen, Mines and Money London Commodity TV for you with Danny Callow, the CEO of African Gold Group. Yeah, you heard it, a fantastic project in southern Mali. And what I really like is also the idea to go onto the power supply with a solar hybrid, 42% less greenhouse gas emissions. They are saving $6 to $7 million, while then in production per year. That is really a substantial amount of money, and also makes the company independent from power supply. Which I rate very important when you are working in Africa. Of course, it's always good, but great infrastructure in place. And I like that they really take care about the Mali population, about the people there, because they want to have as many as possible employed into the terrific future gold mine. So check out the company. I think the market cap is a bit too low for what the company has. 4 kilometer strike lengths, 50 kilometers of strike are still there to be explored. And so, as Danny said, this could be a real monster. Check out the company. Thanks for watching us, and bye-bye from Switzerland.